Hey everyone, welcome back to the channel. I'm Amanda Pliska, and today we're diving into one of our most asked questions from our clients as they get close to retirement, which is, should I enroll in Medicare Part B if I already have FEHB? Now, this is one of the most important retirement healthcare decisions you'll make, and it's not a one size fits all. So today we'll break down the pros, cons, costs, and timing so that you can make the choice that works best for your health and your wallet. So let's get started. Now, Medicare Part B mainly covers outpatient care. That means doctor visits, preventive screenings, lab tests, outpatient surgeries, durable medical equipment like wheelchairs or oxygen, and even some home health services. But here's a key detail a lot of people miss. Medicare Part A covers your hospital stay, the room and board, but it doesn't pay the doctors who treat you in the hospital. And that's where Part B steps in. Now, Part B isn't free. There's a standard monthly premium, and if your income's above certain thresholds, that premium can go up, and we'll dig into that later. You'll also have an annual deductible, and after that, you typically pay 20% co-insurance for most services. Now, one big plus is that Part B works nationwide, no network restrictions. You can see any doctor or specialist that accepts Medicare anywhere in the US. Downside, it generally doesn't cover care outside the country. So let's talk about when Medicare can really be worth the money. Because for some people, it's not just an extra expense, it's a big safety net. Now, if you expect to have frequent doctor visits, see specialists, or need outpatient procedures, having both Part B and FEHB can be a game changer. Medicare will pay first, and FEHB kicks in as secondary coverage. And often that means zero out of pocket costs, except for dental, vision, prescriptions, which are all separate. Part B can also be a good move if your FEHB plan has limited outpatient or specialist coverage. It gives you another layer of protection there. And maybe your FEHB plan has a smaller network. With Part B, you can see any provider in the US that accepts Medicare, so way more flexible. And honestly, some people enroll simply for the peace of mind. It's an extra protection against catastrophic health costs. Signing up early also helps you avoid lifetime late penalties and surprise expenses if your health takes a sudden turn. And finally, if you plan to travel a lot within the US or live part time outside your FEHB service area, Part B ensures you're covered almost anywhere nationwide. Just remember, it generally doesn't cover care outside the US. So, in short, Part B can be beneficial if you want broader access, extra protection, and especially if your health or travel plans demand more flexibility. So, we've covered what Part B does and when it's worth the cost, but what about the flip side? There are definitely situations where skipping Part B might make sense. If your FEHB plan already gives you strong outpatient and specialist coverage at a low cost, and you're happy with your network and benefits, you might not need Part B. Your plan may already handle most of your needs. Also, if you're in excellent health and rarely use medical services, you might decide that paying that extra monthly premium just isn't worth it, at least for now. Some retirees choose to keep their retirement budget lean, and Part B premium could be, put towards other priorities, especially if your FEHB coverage is already solid. And here's something people forget. FEHB often includes dental, vision, and wellness programs, so Medicare Part B doesn't cover any of that. And if you skip Part B, you still keep those FEHB extras. So skipping Part B isn't always a bad move. It's all about balancing your health needs, your budget, and the coverage you already have. But a big warning here, if you delay Part B without having credible coverage, you face a 10% permanent premium increase for every 12 months you delay. One important detail to note is that this penalty applies to the base tier of the Medicare premium at the time you enroll. It's separate from the income-related surcharge that we'll cover in the next slide. But the good news is, while you're still actively employed with FEHB, that coverage counts as credible, so no penalty. And you can sign up during your initial enrollment period, so that 3 months before your 65th birthday to 3 months after your 65th birthday, And also during your special enrollment period, if you separate from service, you have 8 months to enroll in Part B, and those would not have that penalty. But sometimes with your general enrollment period, that January 1st through March 31st each year, with coverage starting July 1st, penalties may apply per that 12-month period. So we've talked a little bit about the penalty for delaying Part B. Now let's talk about the other thing that can make Part B more expensive, your income. Part B isn't free, unlike Medicare Part A. And monthly premium is based on your modified adjusted income from your IRS tax return 2 years prior. So, for example, your 2025 premium is based on your 2023 income. And Medicare counts a lot more than just wages. A higher modified adjusted gross income can come from self employment income, pensions, withdrawals from IRAs or 401ks, your Social Security benefits, capital gains, dividends, interest, even some tax exempt interest, rental or business income, and some foreign income exclusions. So if your income is high enough, you'll pay an extra amount called the IRMA surcharge. And the catch, you don't get any extra coverage for paying more. Only the price changes. Now, if your income has dropped since that tax year, maybe you retired or had a major life change, you can appeal for lower premium using Social Security's Form SSA 44. So it's worth knowing both how your income affects your premium and how to get it reduced if your situation has changed. That way, you're not paying more than you should. But at the end of the day, deciding whether to enroll in Medicare Part B is personal. There's no one size fits all answer, but here's a framework we use with clients to help them decide. First, your healthcare needs. How often do you visit doctors or specialists? Do you have any upcoming surgeries or expect ongoing care for a chronic condition? And if, either of those questions are yes, Part B might save you a lot in out-of-pocket costs. Second is your budget. Can you comfortably add an additional premium per month without cutting back on essentials? And if it would stretch you too thin, it might not be worth it right now. Third is the coverage gaps. Does your FEHB plan have weak spots in outpatient or specialist coverage that Part B could fill? Flexibility. Do you want the freedom to see providers nationwide without worrying about network restrictions? And lastly is the penalty risk. Will delaying Part B lock you into higher costs for life if you enroll later without credible coverage? Run through these questions honestly, and the right decision is the one that aligns with your health, your budget, and your peace of mind. So thanks for watching. If you found this helpful, please like this video and subscribe for more retirement and benefit tips. If you'd like to dive deeper into topics like this, make sure to subscribe to our channel and visit our website for more resources. You'll find our information in the description box below. Or if you'd like to explore your personal situation in detail, you can scan the QR codes on the screen. The first takes you to more information about our firm. It lets you schedule a no-cost retirement readiness consultation where we'll learn more about your situation, goals, and needs, and share how our firm can help. The second takes you straight to our YouTube channel so you can subscribe and never miss new content. Until next time, take care and stay informed.